Welcome to the deep dive. Today, we're tackling a really fundamental question about your money. Should you focus on saving it or, investing it?
hmm
We've been looking at this article, House and Sense. Basically, should you invest money or save money?
Right. And what's interesting, like right off the bat, is how it looks at money troubles for pretty much everyone. Doesn't matter if you have a little or a lot.
Exactly. So our goal today is just to pull out the really crucial insights for you, make it clear without getting bogged down.
And the core idea seems to be it's less about the amount of money and more about, well, how you understand managing it.
Yeah.
Financial know-how, really.
Yeah. The article suggests that whether someone's always short or maybe they suddenly have a windfall and don't know what to do,
Oh.
it often boils down to that same lack of knowledge.
Okay, so let's unpack that. It talks about two money problems. First, the one we all kind of know,
Mhm.
not having enough cash.
Right, the shortage. But it adds a twist saying that even if income goes up, that feeling of shortage can, persist.
Which can eventually lead to the other problem, strangely enough.
The problem of having too much money, how does that work?
Well, the article frames it as having a large sum, maybe inherited or, lottery win, but without the background or the skills to actually manage it well. So the money's there, but the understanding isn't.
I see. So sudden wealth without the financial literacy to handle it.
Exactly. And the article argues the root cause for both not enough and too much isn't really the dollars and cents.
It's the knowledge or the mindset.
Yeah, the knowledge of how to manage it. A shared focus maybe on just spending and then saving whatever's left, kind of passively holding on to it.
Okay, that brings us to the saving versus investing thing.
The article makes this really key distinction. It talks about saving money. The Kamard term is semi.
Okay.
First is having money for business or investment. That's, or let's sigh. Or sigh. So just labeling it differently in your head.
Kind of, yeah. The argument is that if you think of leftover cash only as saving money, the habit is just to pile it up, hoard it almost.
Right. But if you mentally frame it as money for business or money for investment,
it naturally pushes you to start looking, to find opportunities for that money to, do something, to grow.
it changes the default action from hold to seek.
Precisely. And that ties into the idea of money being active, keeping it in your pocket, or even just a basic savings account. Sure, it feels safe, low risk.
But it's passive. It's just sitting there, not really working for you, and maybe even losing value slowly, right? Inflation.
Exactly. But when you deliberately put money into something, your own venture, maybe partnering up, other investments.
It becomes active. Its job is to generate more money. Yeah. So the article stresses that it's the location and the intention for that money that makes all the difference. Same leftover cash, totally different function.
So, okay, for someone who's mostly just been saving, how does the article suggest making that shift?
Well, it starts with a question. If you are saving, what are you actually saving for? Is it just covering bills and potential liabilities?
Or is it for building assets, things that could grow?
Right. And here's a practical tip it gives. Don't just automatically save everything that's left over.
Okay.
Even if you have absolutely no idea where to invest yet. Try consciously labeling a percentage of your savings as, potential investment funds.
Earmarking it.
Exactly. Just the act of doing that, the article suggests, kind of primes your brain. It encourages you to start learning to pay more attention to financial stuff.
So you're creating a mental bucket for growth even before you know what goes in it.
Yeah, it shifts the mindset from purely accumulating cash reactively to proactively setting aside resources for future growth, even if that future is still fuzzy.
Okay, so bringing this all together then, this deep dive into the article really seems to highlight that the big difference between financial stagnation and growth isn't always about income level.
No, it seems to be much more about that mental shift, moving from just saving to actively looking for ways to invest to make your money work for you.
It really makes you think, doesn't it? Is the money you have left over each month just sitting passively?
Or is it positioned, even just mentally at first, as a seed? A seed for potential opportunities down the road, ones you might not even see yet.
Yeah. What's maybe one tiny step someone listening could take, today, to start shifting even a small part of their savings towards that investment mindset?
That's the question, isn't it? Even a small step. Definitely something worth mulling over.